Kookmin Bank, South Korea's largest bank, has completed a full lifecycle stablecoin test. The pilot covered everything from issuance to offline payments and cross-border remittance. The test ran at a Holly's Coffee kiosk in Seoul, where customers could pay via QR code without needing a separate crypto wallet. The back-end settlement was handled via blockchain, preserving the normal checkout flow. On the international side, the one stablecoin was converted into a USD stablecoin and sent to a bank account in Vietnam in under 3 minutes. The transaction achieved an 87% cost reduction compared to traditional SWIFT transfers, which are used by thousands of banks globally. This is a concrete example of blockchain being used to streamline real-world financial processes. The pilot used Klaytn, a blockchain platform developed by the parent company of Kakao, one of South Korea's largest tech firms. The bank's spokesperson highlighted the efficiency gains and the potential for broader adoption if regulatory conditions allow. Kookmin has made it clear that it intends to launch commercial stablecoin services once Korea's digital asset legislation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Is finalized. The proposed Digital Asset Basic Act aims to establish a legal framework for digital assets, covering issuance, trading, custody, and supervision. However, the bill has stalled due to disagreements between regulators. The Bank of Korea wants only banks with at least 51% ownership to issue stablecoins, while the Financial Services Commission fears this could stifle innovation. The regulatory uncertainty is a major factor holding back the commercial rollout. The pilot itself is significant because it shows a major financial institution is actively exploring blockchain-based solutions for domestic and international payments. The QR code payment system is particularly noteworthy because it reduces friction for end users who don't need to learn new tools or change their behavior. The backend, however, is where the innovation lies, using blockchain to settle transactions instantly and securely. The cost savings are also a key driver. In the test, the stablecoin transfer cost just 13% of a SWIFT transfer, which is a huge margin for a system that currently dominates global banking. The pilot's success could pressure regulators to move faster on legal clarity, but until then, the bank is in a holding pattern. The broader competitive landscape is also shifting. Other financial institutions are watching closely, and the regulatory debate is shaping the future of stablecoin adoption in South Korea. The next signal to watch is whether the Digital Asset Basic Act passes in its current form or if the 51% ownership rule is softened. If the bill is passed with fewer restrictions, it could accelerate the adoption of stablecoin services across the country. If not, the innovation could be stifled. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Or pushed into the hands of a smaller group of large banks. The test also sets a precedent for how stablecoins could be integrated into everyday commerce. If more merchants adopt QR code payments backed by blockchain, it could lead to a shift in how consumers and businesses handle money. The next signal is regulatory progress on the Digital Asset Basic Act and whether the 51% ownership rule is maintained or revised. The outcome will determine whether this pilot becomes a broader industry trend or remains a limited experiment.